Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Tuesday, October 15th. We are going to take a look at KLA Corporation. This is out of the information technology sector. It's the first time I've taken a look at it, so we'll be looking at it together. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button. Come on out of the shadows there for those of you who have not joined the Vested Interest community. Click that subscribe button. Click the notification bell so you're notified whenever we put out any new content. I do the Stock Pick of the Day video series Monday through Thursday whenever the market is open. We take a look at a company that stock has pulled back on the day, see if it's presenting any value, and drop a comment down below. Let me know what you think of KLA Corporation. Is it in your portfolio? Is it one you're watching? Maybe it's one you're selling. It does look like it's run up a little bit, but it does have a big pullback today, so that's why we'll be looking at it. And if you would, watch the videos to the end. Watch time is one of the metrics that the YouTube algorithm uses, as well as all the other stuff we just talked about. And a special thank you to all the subscribers out there. Really do appreciate all of you continuing to come back and watch the videos and being members of the channel. It really does help out, and the channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. These are the metrics we will be running through in this video. This is how I look at a company on a high level to see if I am interested in adding it to my watch list. Thousands of companies out there to run through. This gives me a pretty quick set of metrics that I can use just to run through on a high level. Then if it does make it onto my watch list, I do more of a deep dive into the financials of the company, taking a look at their balance sheet, their income statement, looking at stuff like their debt to equity ratios. Are their revenues growing over time? Are their margins expanding? Are they paying down debt? So there's a lot of other metrics out there that you can look at. You can tweak this to your liking, but again, this is an initial screener to see if I want to put it onto my watch list, and it must meet 5 of 8, with this being a company that's in the information technology sector. It will be 5 of 8. If this was a financial company like a bank or an insurance company, then it must meet 6 of 9. We throw in price to book. You can use price to book for any company. Just if it's outside of the financial companies for something other than banks and insurance companies, make sure you're comparing that company to other companies in a similar sector that produce similar products. Now, getting back to KLA Corporation here, you can check them out at their homepage, www.kla.com. That's www.kla.com. That's where I pulled this information from and where you should go to start to learn about the company if you are interested. Advancing humanity. The future is ours to create, whether it's driverless cars, VR experience, or factory robotics. We help turn theory into possibility. We help create technological devices and ideas that transform our future and shape our current life. KLA is proud to be part of the most significant technological breakthroughs. Virtually no laptops, smartphone devices, wearable devices, voice-controlled gadgets, VR devices, or smart cars would have made it into your hands without us. And this is really their tech company. So they're helping other companies bring their products to market, from conception, production, to the final products, and the things they touch: personal computers, portable computers, cellular phones, smartphones. Who among us don't have a smartphone or a cellular phone these days? Tablets. Most of us have tablets, I'm sure. Smartwatches. Both my kids and my wife have smartwatches. I do not. Hybrid cars. The Internet of Things. Everything seems to be connected to the internet these days. I was even looking at fridges, and you can hook your fridges up to the internet now. It's just absolutely insane, everything that's hooked up. Autonomous cars, VR sets, which seems to be the new thing here. The cloud, the cloud, so storage clouds, space exploration, robotics, and AI, and that is definitely the new buzzword. It was computers or the internet back in the late 90s. Now it is AI, right? It was EVs there for a little bit as well. Seems to be every 3 or 4 years we get a new buzzword for the new hot thing. Robotics for a while was one as well. Now again, it's on to AI. You can see over here on the right, there's a map of all their different locations. They are spread out across the world here. United States, looks like they're in Europe. Over here in the Middle East, and some out in Asia. And you can see some of the key locations here: Ann Arbor, mainland China, Europe, India, Israel, Japan, Korea, Singapore, Taiwan, and then obviously in the United States. Again, www.kla.com if you want to know more about the company. Now, the reason we are taking a look at them, down 14.7% on the day. Huge drop on the day here. We are talking about KLA Corporation, ticker KLAC. Closed out the day at $707.72. 52-week range as low as $452.01, as high as $896.32. So they are still closer to their 52-week high than their 52-week low, and definitely not within 15% of a 52-week low currently, even with the 14% drop. Market cap of $94.817 billion. So they are a larger company, large cap company here. A beta of 1.27. So not surprising with a big drop like that with such high volatility. Beta is the volatility of the market. 1 being the market. Anything above 1 like this one is more volatile. Anything below 1 is less volatile. PE ratio, price to earnings, sitting at $34.97 per share. That's a little high, though, for tech companies. If they are growing fast enough, that's not necessarily outside the realm of what's expected for a fast-growing tech company, but they really need to be growing their revenue fast and earnings fast to justify such a high PE. That is higher than really built out companies and higher than I typically like. Earnings per share, EPS, is very high at $20.24 per share. That's very nice. Earnings date coming up at the end of the month, October 30th, so tune back in there if you want to see what's going on. So it wasn't their earnings report that had them drop so much. That's a big drop for the day. It must have been some sort of bad news because a lot of other chip manufacturing companies out there dropped as well. So something must be going on in the tech sector here that has a lot of these companies spooked. Forward dividend, $5.80. They are a quarterly payer, I believe. We'll see that here at the end, with a starting dividend yield of 0.7%. So very low starting dividend yield. Ex-dividend date was August 15th. They paid out on September 3rd. So you would be in line for the next dividend, though. You're going to have to wait a couple months to get it if you were to buy them now. 1-year target estimate, $839.69, according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one of the places I go to pick up information. Sorry, I'm a little tongue-tied today. Now, we're going to jump over to the right and look at the dividend yield theory to see if this one is potentially undervalued. To do that, we take a look at their 5-year dividend yield average, 1.25%. We compare that to their current 0.7%, or over here where it says forward 0.7%, same number. Now, since it is lower than their 5-year average, that actually speaks to overvaluation. So at least right now, according to dividend yield theory, this one is potentially overvalued. Now, their payout ratio is very low, 27.86%, so that gives them a lot of room to increase that dividend, and their dividend is relatively safe. They are not in danger of cutting that dividend. We went over their ex-dividend dates. Let's drop down to free cash flow. Again, we want growing free cash flow over time because typically if a company has growing free cash flow, they have growing dividends to match. 2021, you can see here $1.9 billion in free cash flow. 2022 up to $3 billion. 2023 up to $3.3 billion, and 2024 looks like a drop back down to $3 billion, but we're going to have to look at repurchase of capital shares and see if that's really the case. 2021, you can see here $938 million repurchase of shares. 2022, huge jump up to $3.9 billion repurchase of shares. Now that did drop in 2023 down to 1.3, and 2024 it's back up to 1.7. So really, there may be a drop in free cash flow in 2023, but I believe they were either flat or up a little bit because they did increase their repurchase of shares. So, I mean, really, because they came down so much in 2022, down from 3.9 billion to 1.3, I will actually say they have a decrease in free cash flow in 2023. It looks like so far in 2024, those numbers are going to be pretty close to what they had last year, though. I think they're not done reporting out their numbers yet, so we'll have to wait. I'd have to look and see what their year-to-year is to see if they're still reporting. But I'm assuming they still have at least a quarter yet in 2024 to report. So it looks like they're going to beat last year's numbers. Now, jumping over to stockanalysis.com, this is another source I go to for information. I am not affiliated with them either, just two sources I go to information, and I always recommend more than one source so you can make sure the information you are getting is accurate and up to date. Sometimes these sources are behind in their updates. Sometimes they could just be wrong. Just make sure you're not blindly following just one source. 2, if not 3 sources is my suggestion. They do have 20 analysts that have taken a look at this. They call it a consensus buy. They have a low estimate of $550. They have a low estimate of $550, which would be a 22.29% decrease from where it currently sits. Average estimate of $804.80. That would be a 13.72% increase from where it currently sits. And if it happened to hit their high estimate of $950, that would be a 34.23% increase from where it currently sits. and you could collect that 0.7% dividend yield along the way if you were to buy them now. Now, jumping into statistics here, I like to look at return on equity and return on invested capital to see how well the company is reinvesting its capital back into itself. And I like 10% or better for these metrics. So return on equity, this is probably the highest I have ever seen, I think. 87.85%. That's smoking high. They are really doing a good job returning their equity back into the company. Return on invested capital, same thing, 23.69, both above the 10% I'm looking for. But this return on equity, I believe that's the highest I've ever seen. EPS growth, I like 5% or better projected over the next 5 years. They're projecting out 20.25%, very, very high there. And revenue growth at 8.86%. Overall, very good numbers. I would just say this 707, boy, if it could pull back a little bit more, maybe another 14% decrease, it'd be a better buying opportunity. But the numbers overall so far look really good. Let's continue on and wrap this one up. Jumping over to dividend history, again, quarterly payout ratio very low, 28.6%. Dividend growth, nice double-digit dividend growth, 11.54%. Like to see that. 14 years of growth, buyback yield is positive 2.89%, shareholder yield of 3.71%. You want to see both of these positive, and they are, so that's good. They do pay out on the March, June, September, December timeframe. Most companies do. Now, going back to February 2022, they were paying $1.05 here. Raised it up August 2022 to $1.30. Raised it up again November 2023 to $1.45. They have not raised it yet this year. They have one more chance to do that to maintain this growth. I would expect if they're going to do that, it will be in this next November raise here. So look for that if you are a stockholder of KLA Corporation. All right, back to the vested interest stock screener. Let's see how this one shakes out here. So understand the business. That's where we started, and that's where you should start if you're looking at companies. So check there. Growing free cash flow, no check there. We had the one down here, it looks like in 2023. Growing dividend, yes, it is growing, double digits. Very nice dividend growth. Dividend payout ratio is under 75%, very low, under 30% actually. Dividend yield theory says it's actually potentially overvalued, so no check there. It is not within 15% of a 52-week low. It is not in my portfolio, so no check there. Return on invested capital is over 10%. Return on equity is smoking high, over 80%. So check there. And earnings per share growth was over 20%, so definitely over the 5% we're looking for. So that's 1, 2, 3, 4, 5. Just makes it. I am going to add this one to my watch list. Looks like an interesting company, not one that I had heard of before. Is it one you've heard of before? Let me know in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And drop a comment down below. Let me know what you think of the video. Let me know what you think of KLA Corporation. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.